again, in order to bolster the recovery that they've got.
Matthew Hassan, thank you very much. We appreciate you coming onto the channel again. Thank you.
You're welcome.
Commodities understood in 3 minutes. Rapid fire. Pete McGuire, Chief Economist and Market Strategist at McGuire. We're not shortchanging you, but we believe you can deliver on a request, Pete.
Good morning, Carson. Good morning, Brooke.
Right.
Morning.
Bullion has to be where we start. Are you still clinging to the view that this is a buy, even at these levels? If so, why?
I wouldn't be surprised to see it bounce, probably, 40 to 80 bucks. But I've got to say one thing. When you've got margin selling, margin calls and the reason for selling and liquidation of the big funds and, of course, the retail sector, worries about Cyprus and those numbers coming out of China, then there's not a lot of sunshine out there. It's more heading to possibly a deflationary mindset at the moment. Inflation is certainly not on any trajectory, and it's fairly contained, so that could have some form of effect on the market.
So any bounce limited?
I think you probably... Look, it's certainly volatile, and I wouldn't be surprised just to see a further uptick. I think it was oversold, and at times like this, people are squeezed for the exit door, and only so many can get out. They need a buyer for every seller when you're in a futures position, and margins have certainly been called to be higher from Comex and so on. So that's always affecting the market, and I just think it's possibly oversold. But it's going to be interesting over the next couple of weeks.
Crude London Brent went below 100 a barrel yesterday, so
Yep.
Psychologically, what does that tell you?
That tells me, and also WTI back through under 90. I think that's just a continuation, commodity sell-off, the China argument, copper prices and so on. I wouldn't be surprised to see. It's going to be interesting what happens with OPEC, whether they come to some form of banding to try and get a higher price leading into the summer, of course, Northern Hemisphere.
So cut back on production.
Oh, well, exactly right. So that's normally their way of dealing with this. But what happens over the next couple of weeks? Look, there's so many components to this argument. You're talking Japanese yen, you're talking the euro, you talk gold, and of course all the other commodities leading into that, and then the bond market. So, sorry, Brooke.
Yeah, I was just going to say, when you look back, I mean, even when you look, say, at the CRB index the other day, 2 days ago, it was down more than 2%, bounced back only 1%. When you look back, though, what has led those declines in commodity prices? Last couple of days, I guess it's been gold, but when you take it further back, maybe, what were the warning signs for all of this? Oh,
what came out of China, and I think what also happened, people were liquidating positions, and that's what always comes into it. I mean, the hedge funds probably saw it as far as technical trading, the algorithms get involved as far as the robots when they're coming to trades, and so liquidation of position after position after position. And if you can't exit a market, people are called for they're being squeezed, and that's what happens. The market really, going back a week, I thought was fairly stable, and there wasn't a lot of volatility. But certainly in the last 4 to 5 days, it's been record highs as far as the vol. So I'm just at the moment holding tight, and you've got to be very game to enter the market at the moment.
You've still got your shirt, let alone your jacket, on your back.
Yes,
so you
I
haven't
have.
lost either.
No, not yet.
Still smiling, still going strong. We'll see you next week.
See you.
Thank you so much, Pete McGuire, Chief Market Strategist and Economist, McGuire.
Let's take a quick break. We'll look at the production numbers out of BHP in a bit more detail coming up.
Yeah, plus trouble building products maker James Hardie went into a halt this morning. We'll tell you why next.